Now we move on to the second game changer, which is tech tsunami. And to help us understand how technology is disrupting the BFSI and Fintech industry, our next segment is a panel discussion on the topic, Adapting to Digital Disruption, How Can BFSI and Fintech Stay Ahead? And let me introduce all our panelists to you, but before that, we'll just take a minute to set up the stage again for the panel. So the stage is set, and let me introduce you all to our eminent list of panelists for this next discussion. And as I call upon your names, I would request you all to come and join us on stage. First, we have with us Dr. Ashish Desai, Advisor Strategic Initiatives for ONDC. Can we have you on stage, sir? A big round of applause for Mr. Desai. All right, next up we have Mr. Bhavik, Vasa, founder of Getvantage. Let's keep the applause going, ladies and gentlemen, as they join us on stage. Third, we have Ms. Yazmeen Azad, National Manager, Enterprise Account for Iron Mountain, India. Fourth panelist is Mr. Anand K. Sundaram, Head Retail Analytics for IDFC First Bank. Can we all clap on beat? Yeah? All right. And to moderate this power-packed discussion, may I call upon stage Mr. Vipul Oberoi, Director of Marketing, CSR and Learning Solutions for Dun & Bradstreet, India. Over to you, Mr. Oberoi.
Thank you, Kaustav. Good evening, everyone. Good to see everyone here, people from the BFSI fraternity and across all functions and domains within BFSI. And we have had some really insightful discussions till now, where eminent leaders have spoken about the trade side of it. People have spoken about on the banking as a whole. And this one particular session is something which was always close to my heart because it's about fintech. In fact, the BFSI and Fintech Summit that we have right now, in its earlier avatar used to be BFSI Summit. But a few years ago, we added fintech because while you can always call fintech as a part of BFSI sector, it's a different, it's a glorious animal of its own. And I think one of the biggest success stories when you talk about India as it is shining today, a lot of credit also goes to the fintech sector. So we have here some eminent leaders here, but all of them are from very different backgrounds and the organizations they represent. While Getvantage, Bhavik from Getvantage, Ashish is from ONDC, and these are digitally native companies. Anand comes from IDFC First Bank, which is largely a traditional setup and which has undertaken a digital transformation journey. And Iron Mountain is on the other side. When these guys decide to take a digital transformation, Iron Mountain is the one which helps them to undertake that journey. And one of the things that we were discussing when we were in the room some time back was the question came, what exactly is a fintech? And it emerged that typically when we say fintech and how is fintech growing, the most oft-quoted statistics is how much have fintechs, the loans which they have disbursed. Lending typically becomes that kind of definition of a fintech. And I'll start with Anand on the extreme left there. How would you define a fintech as a whole, as a sector of its own?
Yeah, thanks. I think fintech, somewhere, as he rightly said, its perception is that fintech means largely into lending, but absolutely fintech, I think, is any kind of financial services. And especially in the last few years, we've seen that fintech is, in a very, very big way, it's helping, the investment business, the deposit business side, absolutely in a very, very huge scale. I think in India, if I give some numbers, like 15,000, 17,000 crores of SIP is booked. And it's all fully digital, right? So it's at and fintechs are kind of changing their image perception in lending to absolutely every single small services in the financial and the banking side. One is deposits. Of course, in all the other areas, simple things like a KYC or even the digital fintech marketing that we do and everything, every areas fintech is now doing services. So it's more financial services rather than thinking as a lending side.
Ashish, your view? And you come from, of course, having been part of Niti Aayog as well. How does the government view the fintech center and what do you include in that?
So I'll first touch upon, when we talk about fintech from a public angle, it's about digital public infrastructure, right? And we view digital public infrastructure as an enabler for fintechs. The reason is, one, the digital public infrastructure actually works on one principle that leave no one behind and try to build it at population scale. So when we look at fintech, it's all about how do we reduce A, the cost of operations, and B, ensure there is no error of exclusion. So how can you democratize at the lowest possible denominator is what the view is from enabling fintechs.
So to build it at scale, at population scale, and plus not exclude anyone. That's a big challenge there.
Yes, it is. And it is that's where it is a function of collaborative governance, co-creation, and co-innovation. So you look at any of the products, it is always driven by a private sector along with interplay with the appropriate infrastructure. Let's take an example of UPI, and there is a classical proven case, it's in public domain, that UPI transaction is having a causality with lending, and UPI transactions have causing unsecured lending. And it has having a causality with your savings. So when we look at that, so anecdotally, when we talk about inclusion, and many bankers in the crowd, and I used to be a banker earlier in my previous avatar, you move from when you're an investment banker, you call everybody clients. When you go to retail, the clients become customers. And when you go to digital public good, it becomes citizens. C remains, but the perspective changes. And that's all about is like, build at population scale, leave no one behind.
Bhavik, you had this view that typically when we say fintechs, what we imagine is a 100% paperless company which has only applications and possibly the leanest of teams to deliver the services. Does that hold true for fintechs?
Vipul, thank you for the question. Thank you for having me here. And thank you for putting me on stage on a panel on fintech as the only fintech representing. So I think the target's already on my back, starting off. But to answer both your questions, right? What truly is fintech? So just to give context, interestingly, unfortunately, fortunately, I say this. I have now spent a majority of my career, the last 15, 16 years in the world of fintech. And I say this, that I probably started my career in this space before there was this buzzword called fintech, right? 2005-6 mein, I don't think this word existed at all, right? So yes, having my roots or my career started at a Wells Fargo bank and in banking and financial services, to have got that leap in Silicon Valley, in India, building businesses in fintech, I think I can only say, even after a decade plus, I don't think anybody is an expert to really define the word fintech. I think it's just taken an evolution. As technology has taken an evolution, we've seen multiple different definitions of fintech. What started as digital payments, and actually I'd like to add, lending to bahut baad mein aaya. It was always the easier ones, right? Payments was the first thing that fintech would solve. Then probably wealth and capital markets or public capital markets. So we see brokering and all of that going into tech first. I think to summarize and simply say and really at Getvantage as a leading fintech, we simply believe this one mantra that our role is that it's ultimately what can technology do to build better distribution, reach, and efficiency in the world of financial services. Technology is just the enabler. It's a level playing field, it's just the enabler. And the intent and the idea is, as complex as financial services is, Can we just simplify it? We're not here, unlike a lot of my peers, fellow founders, you'll have a lot of fintech founders saying we are disrupting this or that. I don't think we need to disrupt anything. We need to simplify. We need to simplify journeys. We need to ensure that access and reach is simplified. And I think that's the role fintech has to play. So yes, a lot of large financial institutions, banks today now have a fintech team within themselves, a fintech lab. Our role as fintech is really to build that bridge between that emerging customer and the traditional financial services. And to answer your second part of the question, which was, it's very cool to say digital, let's create a digital first journey, but to understand that you are still dealing with your customer base, your population, your citizen base, that still has a physical approach to things, has a physical reach to it. I started saying this, Vipul, I was telling you this before the session. Before Getvantage, I built a business called It's Cash. I'm sure a lot of you all know this. We were the earliest fintech in the country, way before a lot of the other digital wallets. And we simply kept saying, India is about a phygital journey, right? How can you have a physical blended with digital, right? And how can you at least simplify or build efficiencies in certain parts of the value chain? And I think that's what's too important. It's really not the debate. It's another very fancy thing to say India versus Bharat. It's all one. Yes, you have different demographics, but at least ensuring that which part of the journey, right? Sometimes it's the front end, sometimes it's the back end. Can you just transform that with the phygital journey? And that's what tech should do.
Thanks. And Yazmeen, what Bhavik just mentioned about taking that journey, which part needs to go from physical to phygital or phygital to totally digital? And Iron Mountain has been helping organizations with that. Do you think banks are trying to be fintechs?
Good evening. I would just like to say what Bhavik said and would take it from there. Iron Mountain just does the same thing, is from a physical to digital, how do you transform that? So if you have a lot of data in physical, how do you transform into digital? That's what Iron Mountain does. Iron Mountain enables you to transform that journey from a physical to a digital using different technologies, and that's what we do. So whether it's a fintech or whether it's a bank, we are there.
So what do you think are the biggest challenges that any traditional company faces while going towards digital journey?
So the biggest challenges, I would say, whether it's a bank or whether it's an insurance, or is the large chunk of physical data, and that data resides with, at Iron Mountain in a physical format, and that's a critical information from a regulatory perspective or from a compliance perspective. How do I help, Ashish, or how do I help them convert it into a digital and give them what he needs? Just a physical form lying in my facilities would not help you anyway. You have to transform it, and that transformation has to be by using certain technologies, and you get the right information. And, like Anand said, cost of operations. So how do you reduce your cost of operations? So all our technology that comes, we help you do that.
So everything like physical, when it gets converted to digital, it enhances the value that we can derive from it.
Very much.
And Anand, you have probably slept with data more than anyone else here. And when you see a lot of data, and banks, having worked with banks, I've seen that there is so much data that banks have. We didn't even knew we had big data because the term wasn't even coined then. And how do you feel that if an organization, a BFSI organization, has to become more digital, how do they use all that wealth of data which they already have?
So I would say that it's a long journey for me, about 20 odd years in this banking right now, almost 24 years now. So I think I'll start by saying that maybe, almost 24 years back, it was so difficult for me to explain what I am doing to my own family. Right? If I say I was doing something on BIU or an MIS or data person, it was, people thought banking means, you are on the front end. The transformation of data on a banking or a BFSI, the way I have seen it, right? So, today, data is no longer seen as, there was an era where data was seen as a back office, a center of excellence, somebody sitting at Vizag or some remote place in India doing data for the entire India or even overseas. Today, data is right there. You are sitting along with your, as good as, I would say, the most senior management, the CXOs. You are sharing seat with them and you are actually defining and kind of part of that transformation that you are telling them what is to be done. So I think data is frontline. The amount of data that is available today, I think data has become as a pillar for a lot of the BFSIs or the fintechs. That's the engine that is driving sales. So I think data is no longer seen as a back office or a back end or an enabler or a support function at all. It's as good as any other sales or a distribution channel, and it's the advising channel that tells you what to do next. So simple thing, I think even look at our own private life, for example. If I give a very anecdotal example, like just to go back home, everybody today checks a Google map and checks the data. So if you have to start your diet, they'll wear a digital watch, they'll start checking what is the steps I have done. So data has become so much embedded within yourself that it's no longer, kind of something that will come and, people will open an MIS or an Excel or not. Its situation has become that you first understand it. And that's a, I think, mindset transformation that people have themselves gone through.
So the lines are pretty much blurred on what BFSI and Fintech is, obviously. While there are certain definitions to it and we stick by it, and we have special awards for Fintechs also, for that matter. But the idea is that there is a lot of collaboration which is happening between the two. And here we would also want to focus on whether there is collaboration or is it actually competition which is being called collaboration, but because we want to draw from each other's strengths. So Ashish, what has been your take on it? Because government has collaborated a lot with fintechs. You have also been on the other side where there is a lot of, is there an interoperability? Is there a collaboration? What's your view?
So before I answer your question, I would like to draw a distinction between transformation and transition. It is digital transition and digital transformation are two different games. And that needs to be viewed with a different lens, right? So with that realm, we will focus on digital transformation. And when we talk about digital transformation and collaboration and cooperation and competition, all the three exist. It necessarily needs to exist, right? Because you have one institution, for example, who would be focusing on MSME, and there is other institution, for example, who would possibly doing alternative data scoring, doing individual loans. Now, both possibly have a role to play and both possibly have a role to collaborate to bring the acquisition cost down for one and to do a cross-sell ratio, higher cross-sell ratio for others. Now, when we look at open networks, which is like ONDC, it is all about how interoperability can work. It is all about how can I have a choice for the buyer and how I can have more markets for the sellers. And that can happen only if there is interoperability. So yeah, in summary, I think there is a role for everyone to play, compete on one hand and collaborate on another.
And from the horse's mouth, Bhavik?
Oh no, we are a living example, Vipul, of collaboration. I think there is, no two doubts. Yes, it sounds fancier when fintech startups and founders and the investor base love listening to the voice saying we're disrupting or fintechs will kill the others. It's never a versus. It's never a bank versus non-banks, right? Just to give all of you all perspective, as Getvantage, we are probably one of the leading SME financing and alternative financing platform. We do a lot of new age cash flow based funding, so unsecured. And really our role is, we're also our own NBFC. So yes, you have to have your regulations and licenses, but we pretty much work with every other large bank and NBFC out there. We are very clear in what role we play. We understand that the larger financial institutions, banks, SME funding, financing is priority sector in this country. It is the largest unserviced, fulfilled credit gap. But our role is really to be able to say, look, these large financial institutions, banks like you in the crowd, you all have the deep balance sheets, right? Our ability is to, and I really love what Ashish painted the picture saying, it's really not transition, but it's transformation. and we talk about data, let me tell you, the role of a fintech is really to be able to cut through the tech debt. We really say that large incumbent players have a tech debt, which is, legacy platforms out there, right? Can we build a data first, API first stack and really start for pulling data that is digital in its first place? So it's not taking a physical form or physical data at a branch or a network, but really making sure you pull data on a small business, right? Live, right? We all know we can pull GST data now, but there are so many other sources of data on a small business that through an API first stack we are able to pull and evaluate these businesses in real time. Just to leave everybody with one example, what data is really doing is, we all know as customers, we are now paying, UPI has happened, digital payments has happened in India, so now we are all paying for whatever goods or services we are buying from small businesses, we are paying digitally. That means all these small businesses are getting their revenue streams that much more digital. Can you tap into those digital platforms and pull live data? And so you're not waiting on their bank statements alone, right, for a data point. So I think that's what the role is, that how can a private tech or digital first platform integrate with the larger ecosystem that already
Anand
exists.
is itching to probably
definitely. I
agree
just
or
wanted to add
agree to
something.
disagree.
Yeah. No, I just wanted to add, see, competition,
You have to agree because we are partners. You're a partner bank, so I know you agree.
Yeah. No, I just wanted to add, see, I generally feel, because he touched upon that transformation or transition, I generally feel customer himself has changed. The customer's preferences have changed. I think everybody today is so comfortable, because forget banking and financial, they're so comfortable, everybody is sitting at home and ordering through a Zepto or a Amazon or anything else, right? People have become so comfortable. So you cannot say traditionally banking, you still come to a branch and do all these activities. So customer themselves have changed so much. So, and fintechs offering so many things, so many fintechs are offering so many things digitally. A bank now cannot work in a traditional manner. You have to have that offering also in every single field. So I think...
So it's not a choice for the banker or the fintech. It's
out
actually
of
the
the
customer
market,
who is
right?
driving that choice.
Yes.
And I have a comment to add to what he mentioned. It's people talk about fintech taking banks out of business. Globally, world over, not a single bank has gone belly under because of fintech. They have gone belly under because of mismanagement of risk. Credit risk, operation risk, policy risk, governance, whatever. So it's not a threat. It's about how do you collaborate, in what space do you collaborate.
And vice versa, Ashish. Agreed. There is no fintech globally, and I can say this, no fintech globally that has really become as large and at large scale without a very strong financial institution and bank backing it in whichever form, equity, debt, you name it, and it's always been the case.
So I think if it's a prudence in financial management, your ALM, asset liability management, if you take care of it, then the fintechs are also good. And I think that is the learning which they derive from banks. And banks, on the other hand, are drawing the benefits of big data, drawing the benefits of technology from the fintechs itself. And Anand, what kind of emerging technologies have you seen or your organization has derived from fintechs?
It's very, very significant. Actually, one thing I've noticed in the fintech side, he can add a little bit, but a lot of very, very specialized fintechs have started coming. Very, very specialized. Somebody is offering a niche product on the fraud side, niche product on the KYC side, and so on and so forth. So everybody has very, very specialized. Lot of new startup fintechs are there, which comes with something very, very specialized. So I think banks have started adopting to it. I think one big area where bank is adopting in a big way is these fintechs and specialized services is, of course, business growth plus monitoring. I think monitoring area is a huge area where bank is adopting, because with the digital penetration, the way it has gone up in banking side on transactions, just to monitor frauds or just to ensure you are kind of within the regulation, you are able to see, the entire set of rules has changed. The rule of the games have changed. I can go on, but the AI models that we use today means 6 years back, the more important variables could have been, how many transactions person is doing for a day. I mean, somebody doing a 5 banking transaction was considered like 5 banking transaction ek din mein kar raha hai. I mean, it's like a huge thing, right? Today, using a GPay or any other, people are like 20 transaction is like bare minimum. Anybody is doing it. So the whole gamut of thing where a person lives could have been important many years back. Today, people are looking at which IP address is he using. Which phone is he logging in? What is the type of phone? I mean, every data variable behind has undergone a change. So the use of AI today uses far more rich enabled data, which probably we would not have even thought such variables existed.
I'll just like to add to what he mentioned. I mean, in my previous avatar, before coming on the other side of the fence in policy, we used to work with a lending tech company in Africa where considering DEPA and GDPR complied, there would be scoring done on telco parameters along with MTN. Our individual loan was about $20 and monthly throughput was 80 million US. Okay, at a tenor of about 2 weeks. Now, how do you manage that? Because even if you don't have your address proof, your phone tells you where you sleep and when you wake up and where you work. It tells you what's your salary, what's your expense, and where you spend. You just use those data parameters and do your risk assessment. And interestingly to add, as your data starts feeding in, you start having micro segments being emerged. And every risk is a good risk at the right price. So you start pricing the risk and building the portfolio. And that's where the big data is enabling. Second point, big data is also enabling, and tech is also enabling from a policy perspective. Because if I want to know, for example, GDP of a district, we don't publish in India GDP at a district, but at state level. You could technically take FASTag data, Excel capacity, and back calculate using Nightlight and other surrogates, what would be the GDP of a district. So the fintech and the data is just have tremendous applications.
But on the regulation side, how do you say, because what you're talking about is taking all that data and using it.
So that's why I said, considering DEPA and GDPR and all compliances.
The disclaimer came first, actually. What's your thought, Bhavik, on this?
No, I think, look, very clearly, I can tell you personally, right? 10 years ago, moving back from the Silicon Valley back to India, I think we thought, how fast or quickly will India adopt to technology in financial services? And cut to 10 years later, I think we are being talked about across the globe, right? Ashish touched upon a few very interesting ones, but see the common thread, right? He spoke about FASTag, right? We know what happened with Aadhaar in identification. We know what happened with eKYC. This has all just happened in the last 1 decade, right? And while we all know about this, we of course know the very famous India stack story. I think it's such a different conversation, right? From years of my family and friends not knowing what I did in payments, to now globally wherever I go, everybody asks me a question about UPI. What is UPI? How does that operate, right? And I think the biggest word that we have to all take away, and UPI is a classic example, it's scaled because of collaboration between banks and non-banks. It's not really the closed loop wallets that won the story. It all became the interoperable wallets that are ultimately using bank infrastructure or bank accounts at the back end, right? And you've made this ubiquitous in digital payments happening. And I don't want to silver gaze, but that's what's keeping us very bullish. I've seen the journey, 10 years of payments taking off. We applied for the first PPI license. You spoke about regulation, right? We have a very active, proactive regulator. 2009 is when the first PPI license came. Now we have payment banks, small finance banks. But UPI happened. You have this huge inflection point happening now where payments has happened, payments has gone digital. You're going to see this interoperable network effect happening. ONDC is playing a big role in commerce, in financial services on that front. There is OCEN, which is Open Credit Enablement Network. We are as a fintech, as a private player, working very closely with what we call as public infra. This is public infra being laid out. And we as private entities have to literally run on those same tracks. And I think that's where we're going to see this network effect work where bank or lender books working with fintechs for different use cases and niche use cases.
And there's digital currency as well.
And so this is absolutely the UPI moment for at least credit is what's very near term on the horizon now.
And I would like to add what he mentioned. It's digital public infrastructure is also about creating private value. Without digital public infrastructure, you won't have fintechs creating private value. So it is important from various macro parameters also. And that's an important point.
Yazmeen, any thoughts?
Nothing much, because we come as an enabler. So whatever they said, how do you enable it? That's where we help. So Iron Mountain helps when you're talking of the digital journey. How do we help you doing, whether you're talking of big data or too much data, how do you do about that? That's where we enable. So that's where Iron Mountain helps
in your conversations with the clients, typically do they talk about, again, more like scale, or do they talk more on the personalization front, or is it a mix of two?
It is generally mixed of both. So obviously it's about scale also, but it's a mix of both. So wherever you're talking, where he spoke about transformation, that's where Iron Mountain comes in between.
Ashish, you wanted to add on? Okay. Any questions from the audience? Because we have a few minutes there. Do we have a mic at the back?
Hi. Yeah, I think we have discussed this at length. So I just want a broader overview on what do you think would compel the institutions to lend to MSMEs on a far larger scale? Is it the rate, adjusted for return? Are you expecting at least a very good significant premium? So if we discuss on the pricing or this thing, how much of a premium do you think it would take to really for the institutions to get into this sector? And secondly, do you foresee much more risk? Do you think that there should be a much larger risk premium for lending to MSMEs? Because I think somebody just mentioned that they lend to MSMEs at 9 to 12%. So, why would somebody lend to MSMEs at around 9% when you can do a secured home loan at around the same rate or at slightly higher rate? So, if you could discuss on the pricing part of it.
Yeah. Yeah.
To us as lending at that rate, but yes.
Okay. No, I think I'll not comment on interest rate specifically. It's very bank specific. It's every bank has their own algorithms to lend. So coming from, I've worked in 5 banks in my career. So MSME lending has always been on top priority. Every bank, literally, I think last few years, MSME lending is every bank probably has separate vertical only focusing on MSME. There is separate team, both digital, frontline. I think couple of years back, MSME lending was 100% physical only. Yeah. I think now even government offers full digital capability. So banks, to far ahead, they have also gone with like a 1-minute loan and all that. Click of button, you get MSME lending. Rate, I don't want to comment. There are various rates. You said 8 or 9%, but I don't want to comment. There are lending in MSME happening far higher rates also, at far lower rate also. So it's largely, every bank has their own risk appetite, their own algorithms through which they ultimately lend to MSME. And there are various type of lending also. By the way, you say MSME is just a segment. It's ultimately a customer, right? So each of the MSME customer segment, you can do a OD, you can do a absolute unsecured lending, you can do a lending against their stock, n number of various products we have for MSME sector where you can lend. So, and everything is priced very differently. So it's not like one single rack rate which we can straight away talk about.
So your question sums up all of the business and our existence altogether. So, I can answer that at a much longer length, but I'll try and answer it very briefly and try and leave you with 3 points. You asked about pricing mein kaise baithta hai? How do you lend at such a less rate? Why lend unsecured when you can get those rates in secured, right? let me just briefly answer these three broad parameters for you. Number one, I think what we are starting to see, and Anand rightly pointed out, saying MSME is the sector or SME is the sector. We as Getvantage do about 8 to 9 cash flow based financing. We innovated revenue based financing. There is the fixed tenure loans, etc. There's supply financing and so many different variants. But the one common thread that's making cost come down, firstly, is because of use of new tech, right? Our OPEX is much lower. So, sir, as traditional fixed term loans, right? You would underwrite a business or a SME only if you could underwrite them for 3 years, right? Because you didn't have a different tenure. You wanted to sell that product once because your cost, right, would only get recovered if you got interest for 3 years. Now that our OPEX is so much lower because there is a complete paperless, branchless experience, right? Number two, there isn't so many intermediaries. You don't really need that DSA network which has so many different margins in between to acquire that customer, right? So when you bring down OPEX, naturally your ability changes. Second, when you're able to now do personalized financing, believe you me, we do to the same businesses, we give only a 12-month tenure, right? Or we do a 3-month tenure, and what you start understanding is your absolute cost as a lender, if your OPEX is lower, your absolute cost of money that you recover on a loan that you have or money that you've churned 3 times over instead of just giving a reducing balance small business loan for 3 years, you will actually make more in absolute returns when you do shorter tenure. And your ability of, last point, most important, we all are, lending is all about risk and collections first, right? Managing risk and collections. If you can create a digital collection, we exist because we collect high frequency, not once a month EMI. So अगर आप recoveries भी more digital करते हो as a percentage of revenues, and you're able to now reduce tenures, you're automatically bringing in more SMEs that you couldn't underwrite before, that they were not ready to take capital from you as, a 3-year underwriting. So when you add these 3-4 things, this is just the role that technology has to be able to do. It's really these 3 things that reduce your OPEX, bring more customer base in, and that's what allows you to have a portfolio effect, and the cost is up.
Yeah, so you made 2 important points. Value lies in devaluing the value chain, and that's what fintech does. It devalues the value chain, the traditional value chain. And second point on the data points, like in ONDC we launched, now the market's open with personal loan and GST based underwriting, but the next one is derived data underwriting. Derived data underwriting is any transactional data which enables lenders to score, including a new tech company which talks about giving health of a cow using imaging and providing that data. So you could typically go and start underwriting a small farm as well. So it's all about data, it's all about tech, creating new value paradigms.
So that's, I think, the most interesting part of our discussion, and we have run out of time, and I think we could have still gone on for an hour more. But the most interesting part is that there is kind of new technologies which are helping reduce OPEX, which are giving new insights into the personalization of the products, the interest rates, etc. And what Ashish was also mentioning, how to scale up that to a population level and yet exclude none for the benefit, for the larger benefit. And I think that's where BFSI and Fintech together are really collaborating on, is to take financing, taking payments, taking any kind of, anything to do with money to the smallest village in the country, to the biggest metro. And I think that has been probably the biggest success story of India's economy in the past half a decade. And of course, thanks to all the panelists for sharing the views. It's been pretty insightful, and I think the conversations will flow outside as well. And you are free to interact with any of these eminent people here, because there would be more questions. Unfortunately, we have run out of time. So thank you, everyone. It's been a pleasure moderating this.